Hey everybody, Tyler Jefcoat. I'm with Seller Accountant, and today I want to answer a question related to the accounting for, say, rebated products. I'm not trying to speak to whether you should do search, find, buy schemes or whether you should rebate products. Sometimes it's an important way to test a new product. It's an important way to get some initial reviews, and my point is not whether it's the right thing to do or not. My point is to try to help you understand how much it's costing you and to make sure that you're not double counting any of the expenses on your accounting and your bookkeeping. And so let me just dive in and show you what I see here. So here's an example of the three events that I believe are happening when we're selling a product. So when we look at transaction number one here, I'm marketing. And I'm either going to market this product by giving a $100 prebate, if you will, to somebody saying, hey, here's some money, go find my product and buy it. And I may have to pay some kind of a fee to the agency that's administering that for me. Or I may just do my normal, hey, let's use Amazon advertising to get the product to move, right? I'm either going to do one or the other. I'm normally not going to do both. But some way or another, I'm going to get someone to find the product. I'm going to get them to buy it. And from an accounting standpoint, let's say you did the first one, which is the purpose of this video, is I'm going to, as you can see over here, that the product is going to be a $100 product. I'm going to give that $100 to somebody, and I'm going to have to pay maybe some kind of a fee for it to whoever agency. I may or may not have to do this. And then I'm actually going to have to spend that money. So that $108 is gone. It's either on a credit card or coming out of a PayPal account. And so those are pure marketing expenses that we'll look at in the P&L here in a minute. And then it's going to create event number two, which is that someone's going to actually now buy the product. We now have a sale has happened. And if you think about it, like from standpoint of Amazon, well, that means we're going to get the sale price. We sold the product for $100. We're going to have some various Amazon fees, 15% commission, FBA fee, any refund impact or something like that. And for a lot of our clients, that might be maybe it's $33 on a $100 product. And then we're going to have net cash from Amazon of $67. And then we're going to need to do a third transaction because now we've shipped an actual product out of our warehouse or out of the FBA warehouse. And so we're going to expense the $33 in cost of goods sold and remove that $33 from our warehouse or from our inventory account in our accounting system. Here's why this is important, because it is possible if I were to send somebody the $100 gift card or whatever it is to buy the product, if I think to myself, oh, let me go ahead and expense the cost of goods sold because I'm kind of giving away that product. If I go ahead and have my accountant expense it and then send the rebate and then they buy the product, and now I may be tempted to expense it again when it ships. And what's really important is you want to make sure that the cost of goods sold are really being expensed one time. It's only one unit that you're burning to try to get whatever you're trying to get. And so if you look at this kind of in a kind of a profit and loss view down here, and I'll make this the last kind of point of our talk here. Again, articulating these two strategies for moving products. The one in the kind of orange over here on the left-hand side is maybe a rebate model. Maybe you're launching a new product. Again, whether you should or not, that's not what I'm speaking to. I'm speaking to how to keep score once you do it. You got $100 in sales on your P&L. You burned one unit for $33. You had your Amazon fees for $33. You didn't spend any ads because you sent someone directly to search, find, and buy your product. But then you had your expense of sending the coupon or whatever it was that gave them the money, the rebate. And then you may have had to spend a separate search, find, buy fee to whatever merchant kind of company is doing the work for you. And therefore, when you run the P&L, just something to be aware of is that in a situation like this, I sold a $100 product, but I actually netted a $74 loss because I'm eating all of the Amazon fees plus any fees to the agency. And, of course, the search, find, buy itself is a wash. And so, again, I would do these very sparingly if you're going to do them at all. Increasingly, Amazon's wising up to them and shutting them down. And maybe that we can find some kind of other strategy to get our products launched. Obviously, this is different than the blue side over here, where a traditional, once we've got a product up and running, able to sell it, have my COGS, have my Amazon fees, pay my 13% in normal PPC that I might have had to pay to get the product to move, and I'm left with a profit margin, but I haven't had to then go rebate that product back to them. So just a quick look at it. The two things I want you to take away from here is, one, this is a pretty expensive way to launch a product. And two, you really want to be careful to just capture the accounting correctly for these three events. And the one that gets duplicated sometimes is the cost of goods sold one. Make certain that you're not double expensing those cost of goods sold. And thank you. Take care.